So it's Trading Tip Tuesday. Wanted to talk about something that I struggled with a lot as a newer trader and something that I get frequent questions about that's kind of difficult to explain, and that's timeframes. So if you've ever used a telescope or microscope, you know that you can view the same image with different details based on your magnification. You can see the moon with your naked eye, or you can use a telescope and you can see surfaces of the moon differently. You can see peaks and troughs of the moon. You can see craters in the moon. If you're looking at cells in a microscope, you can see the entire dish. You can see individual cells. In some cases, you can see the cell wall. You can go all the way down with an extremely powerful microscope and see minute details inside of the cell. But at the end of the day, you're looking at the same image differently. And that sounds intuitive and obvious, but I think of the time frames for trading the exact same way. I use the time frames as a way to see the same image different ways. Again, that sounds obvious, but I think the more you think of it like that as a newer trader, you don't get bogged down between like, should I be using the daily? Should I be using the 4 hour? Is the 1 hour any good? In general, the faster the market is moving, the lower the time frame. That's just the golden rule. The slower the market is moving, the higher the time frame. That's often why you see legacy markets on daily, weekly, monthly, metals markets weekly, monthly, versus crypto markets on daily or lower, altcoin markets on 4 hour hourly. They generally move quicker. There's generally more moves to take, more trades to take. BTC has gotten to the point where, for me personally, I like the daily. It's 10 years old now. It's got a lot of trade history, a lot of actionable signals in the past that you can backtest based on what metrics you're using and say, okay, this is a reasonable trade setup here. Whereas ETH is more of a daily 12-hour situation, depending on what you're using, what trade setups you're using. Again, this is highly variable and dependent. I know some people use 4 hour or less for everything because they are more of a scalping, quick setup trader versus myself as a trend trader. I prefer higher time frames because I can just set it and forget it. This is just something you need to sort of individually determine for yourself as a trader. Am I going to stay in these positions most of the time over a long-term time scale, or am I going to be watching lower time frames, usually bigger sizes, looking for quick trade setups? I think people start there, realize they can't do that very well, and then end up in the trend trading camp, which is just easier, in my opinion, less stress, requires less screen time, where you just look for setups that are obvious and slow and don't require a lot of management. So if you're a trend trader like me, you're looking at stuff like the 200 MA on the daily. And when you are looking at higher time frames, trends become extremely obvious, painfully obvious, right? Let's say you don't even believe in the 200, you're using the 50 or something else. Whatever you're using, it's very clear that on the daily, we're above or below whatever your MA is that you prefer, right? And that is a very clear litmus test for, are we bullish, are we bearish? Do I take this trade long? Do I take this trade short? Looking at this EMA on the lower time frames, it gets busy, it gets noisy, the signal becomes less valuable. And this entirety of this video is either going to be extremely obvious to some of you who've been trading or sound silly to people who haven't been trading very much. But over time, you pick up this sense of, okay, this is obviously moving on a daily time scale. Ethereum likes to move 12 hour, 4 hour, 8 hour, 6 hour. If you don't have a pro account on TradingView, you can look at this stuff on Bitcoin Wisdom or any other charting site. Usually doesn't have the weird timeframes paywalled. So across on a high time frame for me, across to the upside or across to the downside is much more valuable than across on the 12 hour or across on the 4 hour, which is another reason why I use doubled settings on virtually everything, because it forces me to look at the higher time frames. Even if I'm looking at the 4 hour, doubled settings on the cloud actually are 8 hour cloud settings. If I'm looking at the daily cloud, it's actually the 2-day cloud because it doubled the settings. It slows everything down, reduces the noise, makes the signals more powerful, more valuable, more obvious, more profitable. So this is the 200 on the daily again, and there's very few crosses historically for BTC over the past 8 years above or below this. Yes, it can be noisy. Yes, it can be difficult to trade. But when it's obvious, it's extremely obvious. If you look at 2016, 2017, 2018, extremely obvious where we were. You didn't necessarily need an EMA or an MA to figure that out, but it helps to say to yourself, okay, we're obviously trending bullish, right? Just as we are now. We may not be sure where this is going, if this will hit an all-time high, if this will exceed 30, 40, 50K, if this will go to 200K. We don't know that now, but we know that obviously this is bullish. Historically, if we're on the north side of this MA, we are in for bullish momentum. And that should continue until we are below this MA. If we look at the weekly, we put on a different lens. We say, okay, let's look at the 50 EMA, the 200 MA. What's happened there? All of a sudden we see a different situation where the 200 becomes the amazing dip buying opportunity. If it gets back to the 200 here on the weekly, you can say, all right, this is where I'm buying no matter what, no matter what's going on. I don't care if the world is collapsing. This is where I buy. Whereas on this time frame, the 50 is more of the 200 on the daily, in that it's pretty clear where we're bullish, where we're bearish. Again, we're bullish here on BTC. So I think it's important to play with the timeframes. Don't get bogged down on analysis paralysis, but try to figure out a little bit of curve fitting actually based on the market. If you look at the NASDAQ or SPX or gold on the weekly, the trend becomes so obvious. It's painful, right? But if you're looking at those markets on the minute, or on the 30-minute, and the hourly, it gets so noisy, so incredibly difficult to trade. You're competing with HFT, high time frame scalping traders, high frequency trading, HFT, high frequency trading people who are going to beat you 10 times out of 10, okay? It's not going to happen. So as a trader, it's much easier for me to win on high time frames than win on low time frames. You can also see support resist levels much better on higher time frames than you can on low time frames. This 11.5 level is pretty obvious on high time frames as far as historically where we've been. You can say the same thing about 6.5K, 3.5K, all these levels on the line chart especially just becomes so obvious on higher time frames. So when you're looking for supports and resistances, you can say, all right, I'm going to go to the weekly, I'm going to put on some lines, keep those on the chart, then go down to the daily, the 4-hour, the 12-hour, whatever you're using, and say, even though I'm on lower time frames, this is where I need to be looking for key levels of support resistance. Another way to use high time frames and low time frames together. You can also use low MAs on high time frames differently than you can use them on low time frames. So this is the 20 SMA on the weekly. Again, very predictive of trend, very useful as a litmus test for, are we bullish, are we bearish, are we neutral, are we all over the place? So you can use a tight MA, high MA, look for buying opportunities, look for trend opportunities on high time frames versus low time frames. If we look at charts that don't have a lot of trading history, right? You can't look at the daily really to get a good sense of what's going on. This is YFI USD on the daily for Binance, and obviously just started trading, right? A few months ago, not even that. So if you want to get a true sense of what's going on, you have to zoom in. You cannot, as a seasoned veteran trader, I can see like certain things going on here, but it's much easier to see that. Boom, we're on the 4-hour now. And okay, we have an ascending triangle here that morphed into a head and shoulders that's morphed into a descending triangle that is just bearish, 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 right? That becomes more obvious on the line chart. Pop on some EMAs, you can say, oh, we crossed bearish on September 26th or whatever this was. My trend lens should be bearish from here on out until this recrosses on the 4-hour. You can't even see that cross on the daily because there isn't enough data. So you obviously have to zoom in. Now you can say to yourself, all right, it's bearish on the 50. I know that this is bearish, but if you're looking for crosses specifically or trends, status of the trend, that sort of thing, looking at low time frames for altcoins is imperative. Obviously, most people trading alts do that anyway because they're newer traders, are in it for instant gratification, dopamine hit of I made money, and don't pay attention to high time frames anyway. But that's besides the point. In certain cases like altcoins, though, it's markets that are moving faster. So it's much easier to see what's going on lower time frames. It's much easier to see the trend entries, exits, stop losses on lower time frames. This is clearly bearish, right? You know, you don't necessarily need the EMAs, the MAs to figure that out, but it's helpful, especially in low time frames. Now, if you look at other alts like Monero or Ripple or Stellar or BAT, which was one I just did yesterday, on the daily, it kind of looks pretty messy actually when we're looking at trends. This is the cloud. So if it's below the cloud, it's bearish. If it's above the cloud, it's bullish. And you can see it kind of snakes in and out of the cloud. Has done so a little less prior to 2019 and a little more post 2019. It's kind of all over the place. All of a sudden we go to the 2-day cloud, which is technically the 4-day single cloud. And we look at this and it's like, oh, it's obvious, right? We're below the cloud here the entire duration, briefly above, below, briefly above, below. All of a sudden recently we are just surging above the cloud, much like we were when we were bearish to the opposite side in 2018. So moving up on the time frame for certain altcoins that have the data to do so is incredibly valuable to look at the trend, because you're zooming way out. You're looking at the forest instead of the trees. You're looking at the entire petri dish. You're looking at the entire surface of the moon, and you're saying to yourself, what's really going on here? Yes, this is super volatile in general on low time frames, but if you zoom out, it usually becomes extremely clear. Another reason I like to zoom out for stuff like Ethereum when I'm using the cloud, or this is similar to that 11.5 example for BTC looking for support resistance. For certain indicators, if you zoom way out, the targets become extremely clear. So for Ethereum, in this case, the other edge of the cloud is resistance, and it's right there on the chart for you. You don't have to guess. You know, you don't have to measure 50% fibs. You don't have to do some sort of wave analysis. You don't have to look at 1.618 extensions, none of that stuff. It's all right there. It says, here's resistance, here's resistance. If it continues to move up, this is where it's going to go. It also tells you, much like MAs do, what is the status of the trend? Is it bullish? Is it bearish? Is it neutral? Is it strongly bullish? Is it strongly bearish? That sort of thing. So kind of similar to metals in a respect where you're using high time frames kind of because you have to, because there isn't a lot of movement on low time frames in general. Now, for something like a US election, there's going to be a lot of movement on low time frames in all cases. Another thing I'll say is if you're using high leverage, like 200x leverage or something, for 4x, you're typically looking at lower time frames because your risk is a lot higher, your stop losses are a lot tighter, your targets and entries, exits might be a lot different if you're paying attention to multi-day, multi-week, multi-month stuff. So for crypto, if you're using high leverage, high position size, you're probably not looking at daily, weekly. You're probably looking at less than 12-hour timeframes. But most people aren't successful high leverage traders. So for me, I just recommend most people look at high timeframes anyway. It's just easier, less stress. And then one last example for like BTC pairs, the same type of situation where maybe it was clear on the daily here for Ethereum BTC 2018, 2019, 2020, becomes a little less clear on this time frame on the daily. Just bump it up, right? Sorry, this was a 3-day. I was like, why is that? Why does this look so good, right? This was a test. I was testing you. Why does this look so good? Because it's a 3-day. The trend is very clear, right? It's clean. Looking at this on the daily, it's not as clean. So to me, the difference between the daily and the 3-day is kind of the difference of like single and double cloud settings in general. When people talk to me about trends or metrics or get into arguments with me about settings of stuff, don't be afraid to just double the settings, double the time frame. You know, who cares if no one's talking about the 2-day or the 3-day? That's not the point. The point is, does it make the trade setup clear to you? Look at how noisy this is on the daily cloud. Is anybody in their right mind talking about the 3-day cloud signals? No. Okay, besides me, I'm talking about the 2-day ETH BTC. But on the 3-day cloud, this is pretty clear. It's starting to get bearish again for ETH BTC, right? On the daily, you might get a better entry, but historically it's been extremely noisy. So I hope this was helpful. Talking about time frames. I know it's, for some people it's a boring subject, but for some people it's hypercritical when they're trying to understand trading and what's going on and why I should be using which time frame when. Again, something I struggled with immensely as a new trader. I was looking for that holy grail. Which time frame should I use? which is the best to trade? The correct answer is you need to adjust depending on what you're looking for, depending on the trend, depending on the trading pair. If it's an alt, it's usually lower time frame. If it's high cap coin, something that's been around a long time, it's usually a higher time frame where you're going to find that you'll have more successful trades, better setups, better stop losses, and just more profits in general.